Leading the automotive industry with high standards, Tesla remains the unbeatable champion of the industry. Stacking up profits and consistently gaining upward momentum in the value of its shares, Tesla has proven to be worthy of the reputation it has earned among similar companies. Its electric vehicle models have grown increasingly popular, drawing more attention, customers, and sales. In the third quarter of 2024, Tesla recorded a net profit increase of over $2.1 billion despite encountering challenges with its EVs and experiencing decreased sales at some point. After reaching an all-time high in November this year, there have been lots of speculations regarding the value of Tesla shares in the coming years, some of which we find interesting. Stick with us as we discuss vital details on Tesla stock and tariffs, revealing everything you need to know before you make the next big move in 2025. Let's begin, shall we? Tesla stock. Over the past few months, analysts have different opinions as to whether or not there will be a significant increase in the value of Tesla stock in 2025. However, there has been more positive than negative speculation regarding the issue. Tesla market cap reached over $1.1 trillion recently, and since the presidential election this year, its stock has rallied by over 45%. With 3.21 billion shareholder shares, the company has maintained significant profit, especially in the third quarter of this year. Looking at the results of this year's presidential election, Donald Trump's tenure as President of the United States will likely favor Tesla for multiple reasons. Most importantly, Musk played a vital role in Trump's presidential campaign, offering financial contributions and even going as far as declaring and showing his support on social media. Trump even went ahead and appointed Musk as leader of DOGE, a new advisory committee with the aim of improving the efficiency of the federal government. The strong bond between Donald Trump and Elon Musk is sure to benefit both parties. And Tesla, Musk's prized possession, is rightly aligned to gain those benefits. The increase in Tesla's stock value is no surprise, considering its advantage over its competition in terms of production costs and quantity. Its biggest advantage over the competition is its ability to keep costs under control, thereby sustaining profitability. Note that Tesla does not receive special attention from the federal government, such as a grant or additional incentives. Most of what the company gains, including its tax credit of $7,500 for its EV purchase and emission credit sales, are all part of the incentives made available to all U.S. automakers. Forecasts. According to expert forecasts, by the end of 2025, Tesla stock value may increase from $271 to $431.80, although some experts predict a decline of $230.49, or even below in 2025. The numbers are uncertain, but chances are high that the upward momentum gained in stock value will be sustained for a reasonable amount of time, seeing the factors are in favor of the company. With its market capitalization through the roof, the profitability of the company is of no doubt. The numbers are increasing steadily. News has it that there is a possibility that Trump will eliminate or cut down EV subsidiaries, which may negatively affect automakers that have done nothing but stack up losses. This move may be favorable to Tesla. Even so, the roads need to be clear for America's largest automaker. And this is because many Chinese automakers are out to challenge Tesla. From price to range and battery technologies, these Chinese companies are putting on their A-game to face Tesla head-on. Many believe Teslas are overpriced vehicles, and China leverages this by producing extremely affordable EVs that don't compromise range or useful technologies. These Chinese EVs are also gaining ground, and their rapid growth threatens Tesla. How will it handle this in 2025? Although reports have it that Tesla aims to produce more affordable EVs in 2025, but really, how cheap can Tesla get? Taking a look at all the EV models Tesla has produced so far and considering their specs, one could easily think that it'll be impossible for Tesla to maintain the high standards of its EVs as it intends to sell cheaper cars. Its strength is in making high-performance vehicles with groundbreaking technology and designs. If the company lowers its standards to make cheaper cars, it may lose its luxury aspects and focus more on straightforward designs and performance. Any drop in quality could be a risky move for Tesla as it has already built a reputation for premium quality electric vehicles. How the company navigates the situation and keeps things in check is something we're gonna have to see for ourselves. Tariffs. Now on to the Tesla tariff. A major part of Tesla's energy system and EV manufacturing are done in the US. This is especially advantageous to the company as Trump seeks to remove tariffs on American goods, and of course this means a higher tariff on imported goods. Furthermore, the European Union imposed a 9% increase on Tesla EVs produced in China. Although the increase in tariff applies to other automakers like BYD, Geely, BMW, and Mercedes, Tesla incurred a lower rate than all of them. Some companies had their tariffs increased up to 36.3% initially. The rate on Tesla was a proposed 21% increase. However, considering the fact that Tesla did not benefit from government incentives as much as other Chinese manufacturers, the rate dropped to 9%. Tesla's ownership of an independent production site in China excludes it from the higher tariff rates suffered by German automakers that are, in one way or another, dependent on or involved in joint ventures with Chinese manufacturers. Therefore, it is clear enough that the European Union's increase in tariffs is to protect domestic production while still maintaining business association with China. With all that we have reviewed, it is beyond reasonable doubt that Tesla is far more profitable than many companies. Despite all the challenges and setbacks the company faced during the course of the year, it fought hard to sustain its profitability, and that is what makes this giant company stand out from the rest in its category. Tesla's reputation remains indisputable. Its constant innovation and mind-blowing endeavors continue to amaze everyone who knows or hears about it, making the company appear mysterious as it seems there's always something up its sleeves. More is expected from Tesla now than ever. Hopes are high and expectations are through the roof. Will Tesla be able to sustain its market value consistently or even raise it in the coming year? How long will it take before upcoming Chinese companies overthrow the reigning king of the automotive industry? As we anticipate further updates, analysts, speculators, customers, and fans ponder these questions and more. That wraps up our review for today. We hope you enjoyed this video and found valuable insights on Tesla stock and tariffs. Feel free to share your thoughts with us in the comments below. We are always on the lookout for more updates and are always ready to bring you the latest news. So do well to stay connected to our channel so you can always catch up on our reviews. Please like, share, and subscribe to this video if you love it. Kindly subscribe now if you want to get all the hot reviews and updates. Turn on notifications for all our videos, and you will be the first to know when we post new content. That being said, thank you so much for watching. We hope to have you next time.